Welcome! In this video, will the XCN coin downtrend continue? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
This pattern, which appears as a remarkable structure on the chart, reflects a classic downtrend structure. For a long time, price movements have been moving in downward waves in line with a certain trend. Although there have been temporary rises from time to time during this period, there have been lower highs and lower lows in general, clearly demonstrating that the market has been under selling pressure and investors' risk appetite has decreased. The downtrend line is a combination of these declines, with the price being suppressed by this line every time it tries to rise. This type of structure is very important for technical analysis in the markets, because a downtrend that persists for a certain period of time has a direct impact on investor psychology. Traders expect a sell-off every time the price attempts a top in a downtrend. This is why many traders carefully follow this trend line until it breaks. Right now, the price is facing the resistance of this bearish trend. In a sense, the market has brought itself to a decisive decision point. If the price manages to break this falling trend line to the upside, this is considered a very strong signal in terms of technical analysis, because this breakout signals the end of the downtrend and the possibility of a new price direction. Trend lines are important tools for understanding the direction of the price and predicting the change in market structure. Breakouts, especially in long-lasting downtrends, can indicate that the market is undergoing a structural change and that buyers are beginning to take control. Right now, the price is very close to the border of this important falling trend line. If strong buying comes in at this level and the price breaks above this resistance, it would not only mean that the trend has been broken, but also that the selling pressure has subsided and buyers are gaining strength. However, the break of falling trend lines should often be analyzed in conjunction with volume. If the volume is significantly increasing at the time of the breakout, it is considered to be more reliable and sustainable. This is because a bullish breakout indicates that a large number of traders have taken positions and have reached a consensus that the trend has indeed ended. On the contrary, low volume breakouts may require the market to be cautious because they can sometimes be misleading and the price may return back into the downtrend. In this context, the current situation is quite critical from a technical point of view. If the price approaches and touches the falling trend line, it could create a window of opportunity for investors. At this point, the reaction of the price is extremely important. If the price breaks this line strongly upwards, it technically means that the downtrend has ended and a change of direction in the market has begun. This breakout will also affect traders psychologically, because an upward breakout of the falling trend line creates the impression among investors that the market is now recovering and a new bullish wave may begin. This may increase buying pressure and cause prices to move even higher. However, the break of falling trend lines should often be analyzed in conjunction with volume. If the volume is significantly increasing at the time of the breakout, it is considered to be more reliable and sustainable. This is because a bullish breakout indicates that a large number of traders have taken positions and have reached a consensus that the trend has indeed ended. On the contrary, low volume breakouts may require the market to be cautious because they can sometimes be misleading and the price may return back into the downtrend. In this context, the current situation is quite critical from a technical point of view. If the price approaches and touches the falling trend line, it could create a window of opportunity for investors. At this point, the reaction of the price is extremely important. If the price breaks this line strongly upwards, it technically means that the downtrend has ended and a change of direction in the market has begun. This breakout will also affect traders psychologically, because an upward breakout of the falling trend line creates the impression among investors that the market is now recovering and a new bullish wave may begin. This may increase buying pressure and cause prices to move even higher. In addition, after such downtrend breakouts, the price usually retraces and retests the broken trend line once again. This retest is called a retest in technical analysis. If the price manages to hold below the trend line during the retest and moves up again, this increases the validity of the breakout and generates stronger signals that the price will continue its upward movement. Therefore, instead of taking a position at the time of the breakout, traders may prefer to wait for the retest and trade more confidently.
But we can't decide the analysis with trends only. Let's look at other metrics. Stay tuned.
The current price action observed on the chart has entered a critical period in terms of technical analysis. Especially in the recent past, the horizontal support line positioned above the price level stood out as a reassuring area for investors. This support zone was where the price had previously stopped its downward movement and initiated a strong reaction rally. However, in the current situation, this structure was tested and the price sagged below this level, making a very important technical breakout. Such breakouts should not only be interpreted as breaking through support levels, they should also be interpreted as a signal of a change in market psychology. Because supports are not just technical levels, they are areas where investors have confidence to buy. where previous buying experiences are concentrated and which are psychologically perceived as bottoms. And a downward break of these levels indicates that buyers are weakening and selling pressure is coming to the fore. Therefore, a break below this support level is not only a graphical event, but also an important sign that the balance of power in the market has shifted. The question now is this breakout permanent or is it a temporary aberration? Because from time to time, prices pretend to break support levels and then quickly rise above them again. In technical analysis, this is called a false breakout. If this happens and the price manages to quickly move back above the support level, this indicates that the buyers have regained control and the price is expected to start trending higher again. Therefore, we can say that there is a moment when investors should keep their eyes open. On the other hand, if the price fails to break above this old support level again, i.e. if it persists in the lower zones, this level may no longer work as support, but as a new resistance. In technical analysis, this is known as a role reversal. That is, an area where the price previously failed to break below it now becomes an impassable obstacle on the way up. This could technically herald a new downtrend. If this scenario materializes, the chances of the price falling back to lower support levels increase considerably, and these declines could further disrupt investor psychology and create a panic mood in the market. However, the price behavior after such breakouts is usually based on 3 different scenarios. In the first scenario, the price finds strength just below this level and makes an upward move again, breaking above the previous support. This is a positive development and shows that the bulls are still influential in the market. In the second scenario, the price settles below this level and enters a horizontal consolidation process here. This is an uncertain situation, and it is difficult to comment on the next direction of the price. The third scenario is more negative. After the price settles below this broken support, it accelerates its decline and starts moving towards the next support area. Another important factor that traders should consider at this point is volume. If the support breakout occurred on high volume, the reliability of this breakout increases. In other words, if the trading volume has visibly increased while the price is moving down from this level, then it should be considered that sellers are strong and the downtrend may continue. However, if a low volume breakout has occurred, this should be viewed cautiously by traders and the behavior of the price should be carefully monitored. Many traders in the markets tend to panic sell on such support breakouts. However, this may not always be the healthiest strategy. Because in technical analysis, not every breakout is bearish, and not every support contact is bullish. That's why traders should pay attention not only to the chart view, but also to market volume, patterns, and other helpful indicators. In such cases, being patient and watching how the price will behave allows for healthier decisions to be made.
RSI, one of the most frequently used indicators in technical analysis, is a highly effective tool for measuring the momentum of price movements. This indicator, along with overbought, oversold zones, also gives important signals for the detection of trend structures. When analyzed on the current chart, there is a distinctly formed falling trend line on the RSI. This structure creates a critical observation point for traders. This trend line of the RSI, which moves downward at a certain angle, has been tested many times over time. In other words, the RSI value has repeatedly approached this trend line and returned from there. This shows that this trend line is not just a coincidence, but has become a respected technical barrier in the market. Whenever the RSI has approached this trend, there has been a slowdown or correction in prices. This clearly tells us that this downtrend on the RSI is a reflection of the pressure on the price. In such cases, 2 possibilities come to the fore in technical analysis. First, the RSI fails to break this falling trend line, and this structure remains a strong resistance. In this scenario, the price also struggles to gain upward momentum, and the bearish or sideways movement continues. The second scenario is more promising. The RSI finally breaks this trend line upwards after many contacts. This is when the market dynamics start to change. The break of a falling trend line by the RSI is usually one of the first signs that momentum is shifting. This indicates that the market is now starting to recover from the selling pressure and is moving back to the buy side. When the RSI breaks the downtrend, it is expected to be reflected on the price chart. In other words, as the RSI gains upward momentum, the price starts to move up in parallel. In such cases, the trend break of the RSI acts like a leading signal. Even if the price has not yet broken clearly upwards, this change in the RSI whispers to traders that they need to be careful, that there could be a market reversal. This multi-contact downtrend in the RSI actually summarizes investor psychology. Each contact indicates that buyers are trying again and again, but failing because there is not enough strength. But such multiple contacts also cause that resistance to weaken and become breakable over time. This is because each contact causes some of the sellers in the resistance line to move out of position. Thus, the resistance is eroded. As soon as the RSI breaks this trend, this resistance also collapses psychologically and momentum shifts back to the buyers. However, it is worth noting that the RSI trend breakout is not a signal in itself. Confirmation of such breakouts in conjunction with price provides a safer trading environment for traders. So, if the RSI breaks the trend at the same time as the price crosses an important resistance level upwards, this double confirmation breakout can create a strong buying opportunity in the market. Therefore, traders should consider this movement in the RSI in conjunction with price action. Also, RSI trend breakouts are supported by volume data, which makes this technical signal more meaningful. If the RSI is making an upward trend breakout while the price action is supported by high trading volume, then the trend reversal is more likely to be more permanent. Traders should be careful as RSI breakouts without volume support can be misleading at times. In addition to all these technical details, it is also important for traders to be patient and disciplined with such RSI breakouts. Because trend breakouts often occur before the price changes direction, and during this time, fakeouts can also occur. Therefore, when the RSI breaks the trend, the price should be expected to give upward confirmation, and if necessary, positions should be opened with additional signals. The RSI trend should be broken for an uptrend.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.